Invest Africa, proudly brought to you by KPMG.
Thanks for joining us on this special edition of Invest Africa for one of the most important stories in African business. I'm Chris Bishop, in for Nozipo Mbanjwa. Now, Nigeria is almost the biggest economy in Africa. Holding it back is a lack of infrastructure and, more importantly, a lack of power. After decades of power cuts, it is calling private money to the rescue. Nigeria has also committed an additional $550 million to its newly established $1 billion sovereign wealth fund to increase investment in power. Will it be enough? Over the next 30 minutes, I'm joined by a panel of experts and will be linking to the heart of the story in Abuja in Nigeria.
Power generation is Nigeria's biggest problem. The country is facing an acute shortage of regular electricity supply to light up homes and power up the economy. But after decades of neglect, Nigeria's government is finally taking steps to fix the problem. In August 2010, President Goodluck Jonathan announced a roadmap for Nigeria's power reforms, spelling out key targets to improve the supply of electricity and to ultimately sell underperforming government-owned assets to the private sector.
For years, the industry had suffered from underinvestment during the military regime. And even when the civilian regime came on board, Vision 2020, and the decision to privatize the sector in order to increase generation, you had a lot of fits and starts to that industry. A lot of people kicked against, a lot of vested interests kicked against that privatization. In fact, the first attempt to privatize the industry failed in 2005. But by then, the cry for improved power generation had gone around the country.
The key target is to achieve 40,000 megawatts by 2020, and that was set by the Vision 2020 committee, and that has also been the target from the roadmap for power sector reform. That capacity needs to be transmitted and distributed.
3 years on, Nigeria has sold 6 power generation and 11 distribution companies, raking in just under $3 billion in the process.
The reason why government decided to hand over these assets to private sector in the first place was because they require significant investment. So a lot of those assets are in dire need of investment and rehabilitation. Some of them have very low-hanging fruits. I can tell you, for instance, I'm aware that Transcorp Ughelli, in a very short time, they've increased capacity, they recovered some of the assets, and that's to show that some of these investors are very serious about the investment and the asset that they've won.
Given the underdevelopment in the sector, Nigeria's new power industry is viewed by many as a potential gold mine, one that could generate returns similar to those raked in by the early players in Nigeria's mobile telecom space. But the big challenge for investors is to navigate through the myriad of problems that Nigeria's power sector presents.
The decisions to repair this industry has to be an integrated one. So there are actually several buckets, and from the most important short-term to immediate one, which is fuel supply. In this case, mostly gas supply is what we're talking about. You need to, I think the government needs to make gas commercially viable to produce by the oil and gas producers.
Despite the challenges, the shift from state-owned assets to private sector hands raises hopes for the economic potential of Africa's most populous nation. Much like the mobile telecommunications boom after it was privatized, regular electric power will one day become the norm in a country begging for light.
Joining me in the studio to discuss Nigeria's power sector is Segun Sowande, KPMG lead partner for power in Nigeria, Kuni, chairman of South Africa Independent Power Producers Association, and in our Abuja studio we are joined by Sam Amadi, the chairman of the Nigerian Electricity Regulatory Commission. This is a leap of faith. If you'd said to me a few years ago that Nigeria was going to privatize its generating capacity, I probably wouldn't have believed you. But in terms of the economy, how vital is it? What's going on here?
Well, I mean, leap of faith, but then this is more or less like a 16-year journey. Started back in 1999 to be precise. and it led to the enactment of the electricity power. The law which actually governs electricity power distribution and supply in Nigeria. Now, following that, we got to a point where the current president more or less defined a new roadmap, which was more or less geared towards implementation of what was actually defined in the law. This has long been, we've all been expecting this to actually happen. And the potential impact of this on the economy is just phenomenal. To be candid, power would ultimately easily get Nigeria into an economy that's actually doing like a double-digit growth, if we actually get this right. So potentially power will permeate every part of the sector, of the economy, and the multiplier effect was just going to be quite phenomenal.
Doug Kuni, the chairman of the South African Independent Power Producers Association. What do you see? That this is a big move. This is a radical move for an African nation.
Absolutely, absolutely, Chris. The business of transforming from a monolithic, vertically integrated utility to a competitive market environment is a mega task. At the stage at which Nigeria finds itself at the moment is the institutional, the regulatory arrangements. So putting in place all the institutional arrangements in order to make the system work. But that's just the enabling environment. You still have to put the hardware together. You still have to put the transmission together, the generation together, and the distribution system. And it's all got to still function stably. So it's a multidimensional problem. I think Nigeria is at a crucial stage in terms of doing all the institutional arrangements and making sure the transactions can be effected for private power and private capital to enter the marketplace.
Well, now we're going to link now with Abuja in Nigeria with Sam Amadi, who's waiting in our studios there. He's the chairman of the Nigerian Electricity Regulatory Commission. Sam, just tell us, this is a big project. How confident are you that it's going to be a successful one for Nigeria?
Well, thank you very much. It's a big project. I'm confident, and that confidence derives from the fact that since 1999, there has been consistency in political will to execute a reform. And since 2006, when the regulator was put in place, there's been consistency in de-risking the sector through effective, fair, and credible regulatory intervention. So, three things are working very well for us. There's a political consensus among political leaders that the power sector reform must be executed to the later, and that's why on November 11, we saw the massive transfer of ownership of publicly owned utilities to private sector hands, the biggest probably in Africa up to date. And the second factor working for us is that for the first time, we are bringing a value chain approach to the reform. There's a gas sector reform, there's a unbundling and privatization, where we have a private Canadian company manning the transmission company, and we put in a regulator. We put in a bulk trader to give credibility for bulk purchase. So, like in the past, where policies are not comprehensively thought out and executed, we are doing value chain approach. And the third factor is that NEC, the regulator, my agency, we have, even in short term, won credibility as an accountable, transparent, and consultative regulator that is doing everything to ensure that the market works. And we've been approved by the House of Reps Committee as the most transparent agency in the country. And NGOs did a review of all federal agencies and voted the regulator as the most transparent and the most accountable. Okay. So these three factors give confidence that this project will be executed.
Just hold it there for a second, Sam, in Abuja. Come back to you in the studio, Segun. This is a very ambitious plan. We're talking 40,000 megawatts, which is about the size of what South Africa, the biggest generator, puts out a year in the next 6 years. Surely that's a bridge too far, is it not, for a project like this? Well, what do you make of it?
Well, the plan for 40,000 megawatts was put together as part of Vision 2020, which was meant to position Nigeria as one of the top 20 economies by the year 2020. I think it's an aspirational ambition, one which obviously where we are today, might be a challenge to achieve within the next 6 years. But I do believe that it's something that actually puts us on the right path towards being, focusing on what we need to actually do as far as the sector is concerned. I think if we achieve 2025, that would have been quite good. And the impact would still be quite significant.
Another quick question before we move on. Jim O'Neill, the famous father of the BRICS acronym, he said that he reckons that Nigeria could increase its economy 6 to 7 times if you had enough electricity. Would you say?
Yeah, easily. The multiplier effect of power, as far as the economy is concerned, like I did say earlier on, would be phenomenal. If you actually fix power across the whole value chain in the economy, the cost of doing business, small and medium scale enterprises, it would phenomenally change the impact on the economy and overall business. And that, I think, is a key to double-digit growth for us.
Doug, I'm sure you have your reservations about what could happen here. We have the regulator here on the line here from Abuja. What would you ask him right now? Ask away.
Well, let me just first add quickly to what Segun has said, because installing capacity, if you have gas plants can be built in 2 to 3 years. The bottleneck is probably in the fuel supply. Has there been sufficient development of the gas fields? Is there a supply chain that's reliable to get the gas to the power plants? If we had a well of gas like they have in the Niger Delta, we would probably have about 10 to 15,000 megawatts in place in a very short space of time. I think I don't know how far the passage of the petroleum industry bill has got through, but there are certain bottlenecks that need to be addressed in order to get the fuel supply right. If the fuel supply gets right, then power generation can expand very quickly. The important thing from our perspective in South Africa is, and this is to Sam in Abuja, the important thing for a regulator from our perspective is the regulator must have authority, and it must have authority to enforce. These are crucial to the functioning of the utility.
Can you answer that, Sam? Are you confident that you've got enough authority left when you're letting the private sector have a free hand in generation, that you are going to be able to control things?
Sure. I think the good thing about the Nigerian reform is that the regulator is established by law with autonomy, not controlled by the government as it is, and with the powers to sanction, even financial sanction. Just last week, we had a public hearing to finalize on a regulation for enforcement, and that regulation authorizes the regulator to impose financial sanctions against utilities that are not performing according to their license terms. So surely we have that power. But back to the issue of gas, I think it's right. The real constraint is gas. Transmission, yes, but transmission is improving as government is getting funds to finance improvement in evacuation facilities. But gas is a major problem. But that problem is being addressed because for the first time we're having a better coordination between gas and petroleum and power ministries. Today, we are looking at commerciality by improving the gas price component of the tariff. In the past, we didn't have good bankable gas agreements because of both the fact that the old utilities were not paying gas fees and the gas costs were very, very depressed. But today, those contracts are being streamlined. Gas is now a major part of the tariff, and we are providing for the pricing. So I don't think it is 40,000 megawatts in 6 years is not what we're looking at. We are looking at a market that will sustainably increase both generation and distribution, so that at the end of the day, a value chain approach will give us adequacy and reliability over time. I would say that the major problem in the past has been disarticulation between gas and power. But now we're getting greater coherence, greater framework, and the tariff structure has now given confidence to make investment both in gas processing and gas transport. Apart from that, we have got embedded generation that allows discos to embed power in their distribution. So this short circuits the transmission constraint and also allow more power to come from the Delta region, where there are gas supplies within the hand of small, medium enterprises. So they can work together with the different companies in those areas to embed power quicker than when the power goes through procurement through the national grid. So these are some of the initiatives to ensure that we get close to 40,000. We are not working on 40,000 by 6 years' time. We are working on creating a market that will consistently increase capacity to match load-based demand.
Just a quick comment from you, Segun, before the break. What do you think?
Yeah, What Sam has just said is pretty much defines what the sector really looks like now. We've moved from what was just like an industry to an environment where we're trying to create a market that will actually be sustainable way into the future. Like everyone has said, gas is a major constraint. However, if we get the commerciality of gas right, and we get the GSAs signed sooner than later, then the likelihood of even achieving those things will be realized. Because the important thing is, from the time you actually sign a gas supply agreement, it takes between, I would say, 3 to 5 years for you to actually have the gas flowing at the power stations. So where we are today, if we resolve gas, we are part of the journey is actually covered. But my concern really is that distribution is a critical area that needs to be addressed, because that's where the bulk of the losses are. And even if you increase generation capacity and the losses are still high, the whole funding, the liquidity of the whole value chain becomes questionable. And so that has to be addressed sooner than later.
Doug, quick comment for the break. What do you think? Do you like what you're hearing?
Yes, absolutely. I think there's another elephant in the room, and that's called transmission. The roadmap, I think it's the 2010 roadmap, which was produced in Nigeria, said that the transmission capacity was sufficient for what they had in installed capacity. But if you increase the capacity dramatically, you're going to have to make huge investments in transmission in order to transport your electricity around.
Okay, Doug, we're going to a short ad break now. When we come back, we'll be talking more about how people can make money out of this power sector, and also we'll be taking questions from the floor from our audience. Do stay with us. Still with my guest, Segun Sowande, KPMG lead partner for power sector, Doug Kuni, chairman of the South African Independent Power Producers Association, and in Abuja, Nigeria, Sam Amadi, the chairman of the Nigerian Electricity Regulatory Commission. So before we carry on with this discussion, I would actually like to ask you, how do people make money out of it? Obviously, investors are queuing up. What is the plan? You've studied this. How do you get your returns, and over what period?
Okay. Well, interesting one. Given all the initial challenges, which has led to setting up of interim rules. But when you look at the whole value chain, the value chain approach actually presents opportunities to make money across the whole value chain, right from the gas gathering, which typically sits with the oil and gas companies. So there's investment that's required in terms of, as far as gas is concerned. There's a lot of infrastructure investment required in the area of the transmission of the gases, or fuel, as the case may be, to the generating plants. Now the tariff structure is quite clear. And what has been put in place by the regulator is a multi-year tariff order, which pretty much defines exactly how the tariffs for the sector would actually behave over time. It's also clear, there's a guaranteed rate of return that's actually been built into your investment across the value chain. So, if you break it down into generation, distribution, and transmission, you see lots of opportunities. If you take the transmission space, for instance, which is still government-owned, Manitoba Hydro is actually managing that chain right now. But one of the interesting opportunities there would be getting private sector investors to actually, manage parts of the transmission network in the short to medium term. And that, I think, would be obviously phenomenal in terms of the opportunities it would create, and it would de-risk and de-bottleneck the whole constraints we actually have around transmission.
How quickly do you think it would take to get your money back if you invested your billions?
Wow, I think that's a tough one to tell from where we are right now. I think even though there's regulatory certainty to some extent, I think there's quite a lot that still to be dealt with in the short to medium term before you could actually say that. But I would say in the next 3 to 5 years, we are still pretty much going to be scratching the surface to try and get things on the right path. But maybe the regulator will probably be able to give us a view on that.
Yes, indeed. And we can go there now to Abuja. Sam Amadi, the chairman of the Nigerian Electricity Regulatory Commission. Are you satisfied that the tariffs are going to give returns and attract even more investors?
Sure. The tariff has been removed from government control, so it's now cost reflective. But what happens is that the law requires NEC to ensure that every efficient operator recovers full prudent costs. So what we do is that we have bi-yearly minor reviews to index for inflation, for changes in foreign exchange, for cost of gas, for change in quantity. And then we have, whenever the operator thinks that the cost profile is not sufficiently covered by the tariff, they can always make an application to us for change. And right now, the utilities are conducting loss level studies, which they will verify with us. And whatever the loss level suggests, we will benchmark the tariff. The tariff is regulated, but regulated to capture prudent cost, all the costs, and to ensure that an efficient operator recovers all his costs, makes good return on investment.
One question I have for you, Sam.
Our benchmarks are very generous.
So isn't it that you're giving people a chance of getting good returns, etc.? Obviously, you're covering their costs. Doesn't that mean that maybe people will pay more for their electricity in 5-10 years' time?
Yeah, people may pay more. It depends on what the efficiency at the production level is, because part of it is that we've done the assessment. Nigerian consumers are willing to pay more as long as they get better services. The cost of self-generation by generator, all kinds of types of generators that they're using for their homes and businesses is huge. It's much more than any grid power can cost. So as long as we've not come to the opportunity cost is still low, the people will pay. But the issue is that we want to make sure that they are paying for quality power, for power that's adequate. And so the focus now is to ensure that the operator gets fair return and the people have affordable tariff and good service. So I think as long as the people get the service, they will pay. And our job is to ensure that cost escalation is low. We're not just giving the operators a windfall. We are also benchmarking them to prudence and cost efficiency. Ultimately, we believe that the tariff will be at a point that's affordable and that will be fair return to investors.
Just a quick comment here in the studio before we go to the audience here. I mean, you're hearing this. Tariffs are always a big problem when it comes to electricity generation. What a quick comment from you, Doug?
Well, the one thing about electricity, it needs to be affordable and available at the same time. Affordable and not available doesn't work. Available and not affordable doesn't work. I think the Nigerian government has put in some measures, incentives to the GenCos. There are some tax holidays. There are some a few incentives to cushion the blow for the consumers. And remember, with these power projects, they service all their financial needs within a certain frame of time, typically 10 to 15 years. And you still have a lot of life left in the asset afterwards. So there is means to flatten out the tariff over a period of time and make it much more affordable to consumers. The diesel and petrol genset economy they're operating at the moment is a multiple of expense compared to what they could get in, from utility power.
Okay, well, as Aliko Dangote, the richest man in Nigeria, said, we don't have enough electricity and we're still growing at 7%. It's crazy. But let's go to our audience now. And our first question.
The first question is for Sam. Sam, two things. We hear a lot of there's a big funding gap. People brand figures as high as 10 billion naira on a per annum basis. The other thing is that if we just think through the financing of the assets that we have moved into private hands now, that financing is really short-term bank loans. So my question really is, as a regulator, is this a source of concern for you? And if it is a source of concern, how does the regulator intend to address this? Because I think it speaks to the heart of whether we'll have a successful privatization or not.
Thank you. I think first and foremost, it's a concern to us. Our first concern is financial viability of the sector as a whole. So first of all, we were worried that some of the investors came with hot money. Some of them borrowed probably, the gearing formula should be equity and debt. Some came with much more debt than they have equity. They don't have equity at all, and therefore they are worried about repaying the debt to the banks, and they are under pressure, and probably they're not able to make the investments in strengthening network for reliability, especially for the distribution companies. Our advice, our view has been to help them to have better recovery from the market, and also ask them to look for more money. They got to look for more money, because this is a long-term investment, and their vesting contract and the PPAs for generators is long term. So when people banding figures about the funding gap, they also forget that the funds should also come from market. Now, if we're able to release all the capacity in generation through better gas supply, then the market will be more solvent. You sell more power, and the same tariff, the wheeling charges, the tariff for GENCOs, all of them constitute the funds that you need for the market. So we are looking at the funding with hope that as the market do better, more funds come in. And as investors are getting their returns and seeing a viable financial sector, there will be more investment, and therefore that funding gap can be made. But the critical thing is that we should have more power in the grid to sell. That's the way that the investors can recover their money, service their debts, and probably take up new debts to finance capacity expansion and improvement in network.
Next question from the audience.
A question to Sam, and anybody could also, chip in. Quite happy to receive that. I think it's really about going internationally at the moment. There's a big focus around smart grids, and to what extent are smart grids being considered? Really around that competitive advantage that you're looking to build going forward as an economy.
Absolutely. Well, I think for us, we're looking at smart grids in the sense of gradually increasing the smartness. For example, smart meter. We're talking about super grid because our country is so large and the transmission facility is radial. So we have different gaps. We're not able. The power quality in the north is poor because the transmission is weak. Taking power from the south to the north, you have a large loss level. So the smart grid is part of the concentration at the level of metering, at the level of the grid itself, at the level of SCADA, and much more advanced communication for system control and for the transmission service provider. But the thing is that we have to make haste slowly. We have to look at the cost of everything. We also have to look at the evolution of the sector. We are talking about moving to the transition electricity market and finally to a competitive market. So the smartness is being phased in. We have a regulation now being proposed for smart metering as one aspect of smart grid. And the ministry is talking about super grid and smart grid, but this will cost money. And essentially what we are doing is to look at low-hanging fruits and keep an eye on making the system much more sophisticated. But if you tell me the most important thing Nigeria want now, more generation, better transmission.
Okay, Sam, we're going to have to cut it there, I'm afraid. We're running out of time, but we'll come back to you for your closing comments in Abuja. But starting with you, Segun, in the studio, one of the great things about this, in your closing comment, is that this project is being backed by Nigerian banks. Surely this is the famous Afro-capitalism in action.
Yeah, I mean, it's a demonstration of confidence in the whole process. The banks, the financial system is actually putting its money in the whole process. And like you will find out with most power sector privatization programs, if local capital is not actually, doesn't actually go ahead, then it's unlikely you're going to get foreign investors to actually come in. People will tell you distribution is a local business. As much as you have technical partners, it's going to require, walking through the nooks and crannies of the country to actually get it fixed. And I think it's a demonstration of confidence on an overall basis. I think there's likely going to be a second wave of investments now that the dust is settling, where we are going to actually hopefully get some more long-term financing from the likes of the IFC, ADB, and the World Bank and the likes. And I mean, there are even private equity players who are actually looking at the sector and saying, where can I actually play in this? So I mean, the prognosis is actually looking quite positive.
Doug, what do you sum up at the end of this?
Well, I think there's a lot of optimism for the Nigerian system. I think initially my take is that you will see a lot of investment at the smaller generated distributor level, distributed generation level, supplying across the fence. It takes a long time to build a fully integrated, interconnected transmission system connected to generation, connected to distribution. But as long as the enabling environment, the regulatory environment is there, I think you will see a lot of investment happening at the distributed generator level very soon. And that's very good news for Nigeria.
So Sam Amadi in Abuja, what does the future hold now? for us now in your final comments?
Well, I think the future is good. A lot of hard work is required. We have gaps we have to fill. The last speaker talked about distributed generation. We are focusing on that as a way of getting quick power in before the big projects that take years mature and commission. So I think it looks good for us, but we have to work harder, and we have to win the confidence of both local and foreign investors.
Well, thank you very much to my guests for a fascinating discussion. I'm afraid that's all we've got time for. We come to the end of this week's episode of Invest Africa. Thank you to everyone. Bruce Whitfield is up next as he unpacks the latest news from South Africa's economy on Tonight with Bruce. Until then, from me, Chris Bishop, thank you, and thank you for joining us.